the Wayne County Employees Retirement System.
Welcome.
Thank you. Good to be here. Nice to see you.
And you have somebody beside you?
And Todd Pickett, Department Executive.
You can push the little.
Sounds great.
Yep.
There you go.
Good.
Todd Pickett, Department Executive.
Welcome.
Tequila Allen, Principal Senior Auditor.
Welcome back.
Andrew Ray, Principal Senior Auditor.
Welcome.
Okay, what you have before you is D1, that's just the official transmission of the financial statements from retirement over to the commission. We're going to start off with D2, which is our financial assessment attestation report on the defined benefit plan. And Tequila Allen will go through that report.
All righty.
Okay. Let's see here. Page 1, which outlines the entity purpose and type and the funding sources. Primarily, the funding sources would be contributions from the county, as well as the Wayne County Airport Authority and active members, and also by the investment income earned by the plan. Page 2, the financial statements were audited by George Johnson and Company Certified Accountants for fiscal years ending September 30th, 2018 and 2017. The purpose of hiring an external auditing firm is to render an opinion on the financial statements of Wakers, also Wayne County Employee Retirement Benefit System. The auditors rendered a clean opinion. Therefore, they are in accordance to GAAP. The financial statements, we pretty much did a review, so not necessarily an audit. We are not expressing an opinion. And based on the work that we performed, we concluded that the audited financial statements appear complete and thorough. The summary tables identified on pages 3 and 4 show significant fluctuations between fiscal years 2018 and 2017. So on page 3, the plan's total assets as of September 30th, 2018 were slightly over $1 billion and were mostly comprised of cash and investments. Total assets increased by $88.6 million or 9.6% from the prior year. The increase is primarily attributable to additional employer contributions and higher investment value. Other assets increased from $8 million in fiscal year 2017 to $19.7 million in fiscal year 2018. The increase is primarily due to a $12.1 million increase in the amount of equity held in Wayne County pooled cash. Liabilities increased to $3.1 million in fiscal year 2018 from $1.9 million in the previous year. Liabilities mainly consist of amounts due to the plan's broker for security purchase as of September 30th, 2018. Overall, total net position restricted for pension as of fiscal year 2018 increased by $87.4 million. Additional contributions and improving financial markets were the primary factors in increasing the balance. Page 4.
Okay, while you, Commissioner Webb has a question.
Thank you. Just a quick question on the increased contributions. The increased contributions based on what was required for people to put more of their paychecks into it, or is there more people in it, or what's causing the increased contributions? I think part of when they were doing the consent agreement, they forced employees to put more of their pay into it. Is that it?
Okay, thank you. Two things that made up the increased contributions. The employees, but mostly the county gave us extra money, primarily from the wastewater treatment plant.
That's what I thought. That's why I thought it was curious to read that the two primary reasons for the increase were employee contributions and good economy.
No, he said employee.
Employer.
Employer contribution. Employer contribution. Oh, okay,
Yes.
okay, that makes perfect sense then. Thank you, thank you. I thought they locked everybody out of that. How you get more?
And-
Thank you.
Well, we got you. Why was there like a decrease from 2.9 million to 1.8 for payment of stipends? Was there people passing or something?
How the stipends work, I'm not an expert, but I know the first year they paid an amount, but that a certain amount had to go out. So the first year they didn't pay the full amount. So the next year they did an adjustment of about $1 million that had to go out, adjust the monthlies, and make up for that shortage. And then last year was just regular. So the middle year had a bump of $1 million.
Thank you. Please proceed.
All right, on page 4, as you can see, the total contributions for fiscal year 2018 totaled $164 million, compared to the prior year of $80.2 million. In addition, the fair value of investments were favorable, with a net appreciation of $44 million. Let's see here. The $83.8 million increase, like it was discussed, was primarily due to the county's additional contribution of the $83 million. Compared to the prior year, which there was an additional contribution of $10 million. Let's see, for the deductions, were slightly reduced from 142.6 in fiscal year 2017 to $138.9 million in fiscal year 2018. And the deductions for the plan include the payment of pension benefits to members and beneficiaries and the cost of administering the plan. Page 5. We noted that there was a change in accounting, which resulted in a prior period adjustment for fiscal year September 30th, 2017. The county adopted GASB Statement Number 75, Accounting and Financial Reporting for Post-Employment Benefit and Post-Employment Benefit Other Than Pension, also known as OPEB. Due to the implementation of GASB Number 75, the obligation for unfunded OPEB previously reported on the plan's financial statements was retroactively reduced to zero. As a result, the plan's fiduciary net position was restated as of October 1st, 2017, from $920.8 million to $921.2 million. Management did not have any comments on the final draft. Therefore, it is our recommendation that the OAG's Financial Assessment Attestation Review Report of the Wayne County Employees Retirement System Defined Benefit financial statements for fiscal years ended September 30th, 2017 and 2018 and 2017 are forwarded to the Wayne County Commission to receive and file. And I will turn it over to Andy, and he will cover the defined contribution plan.
Again, our review was based on the independent external auditor's financial report and supplementary information provided from George Johnson and Company, GJC, for fiscal years 2018 and 2017. The GJC report resulted in an issuance of an unqualified/unmodified or clean opinion. The OAG's assessment can be found on page 3 and 4 of the financial assessment. We concluded that generally the audited financial statements and other supplementary information appear complete and thorough. However, a review of the report's content did note the following. The plan's total assets as of September 30th, 2018 were $449.4 million and were mostly comprised of investments in mutual funds. Total assets increased by $29.1 million or 6.9% from the prior year. The net appreciation in the fair value of investments for the current year is attributable to the improving financial markets and resulting investment performance for the year. Total deductions from net position increased by approximately $0.5 million from $26.7 million for the year ended September 30th, 2017 to $27.2 million for the year ended September 30th, 2018. This increase is primarily due to fewer participant distributions and withdrawals during the prior year due to retirements and terminations. There has been improvement in the financial markets over the past several years. The current year saw improved investment performance. Our conclusion, based on the work performed, nothing came to our attention that caused us to believe the audited financial statements of the Wayne County Employees Retirement System and other supplementary information are not presented in conformity with generally accepted accounting principles. It is our recommendation that the OAG Financial Assessment Attestation Review Report of the Wayne County Employees Retirement System Defined Contribution Plan financial statements for the fiscal years ended September 30th, 2018 and 2017 are forwarded to the Wayne County Commission for receipt and filing. Thank you.
Okay. Commissioner Webb?
Yeah, thank you, Mr. Chair. So what's the current funding level for the plan, percentage-wise?
It is 62% for the defined benefit plan. That's up from 55% from last year.
That's excellent. It's because you guys do such a great job.
Well, we thank you for the extra contributions. That's what's really made the big difference.
Okay, and are you done?
Yes, thank you.
Okay. Can you talk a little bit about the consolidation of the providers or for 457 and so on? Just
Certainly.
to mention that.
Yes, I can. So last year we went out for bid and hired a consultant to review all the defined contribution / 457 providers that we have here at Wayne County. And after the review, they came back with a recommendation to go out to bid with a single record keeper for consolidation. We executed that bid, and we awarded the contract to Prudential, who was the defined contribution record keeper. That combined savings plus on record keeping plus being able to take advantage of all the assets and restructure the funding, the investments to maybe collective investment trust or other vehicles, is going to be a savings year over year for the participants for about, we're calculating about $1.5 million a year on ongoing savings. And it might be a little higher, but we'll stay at a conservative approach of $1.5 million. We are in the process right now. We have this August is going to be the consolidation period where everyone's getting communication right now. So everybody who's either in a 457 plan or in a defined contribution plan with Prudential are getting communication. We have meetings set up across the county that we're answering questions, explaining, showing people the savings of the fees. And we're going to actually, bring this plan up also. This plan hasn't really had any major changes. So one of the big changes are by putting in collective investment trust, we can have a much better accounting of investment-related cost and administrative cost. So in this new, starting in September, when statements come out, you'll be seeing a line item for your cost of the record keeper, the consultant, and administration. And we got that at 9 basis points. So we're very proud that that's a very low cost, but you'll see that as a line item on your statements, where before it was hidden inside investment expense with revenue sharing and other fees. So, but we're going, in our booklet, and we're going to, each location, and we're showing the old fees versus the new fees, where the savings are. And everybody should be seeing some savings, even though they're going to see a line item for a charge on their statement going forward.
And I appreciate that. And with all the good news, why is the county's OPEB liability going from like $920.8 million to $921.2 million?
The reinstatement, Todd?
Yeah.
Why is the reinstatement for GASB 75?
Oh, just our reinstatement part, or
Yeah,
the
yeah.
county in general OPEB?
Well, this number of 920 to 921.2,
Oh, just our fund balance?
yes, the OPEB.
With the new GASB, when it came out, it would charge certain areas like the full liability. So, and now a governmental fund, it doesn't hit actually in the fund. It was just reported in the financial statements in a separate area. For ours, it would actually hit the fund directly. So we would have had this large expense hit our account that would then basically be paid by the employer with higher employer costs for it. So discussions with the auditor and looking at the GASBs, it didn't really make sense for us to, the county to charge us and then for us to charge the county back for the same money. So, and plus we would have to wait for that OPEB to be calculated before we could show our financials. And then they couldn't do their financials, so our financials were done. So it was a mess if they ran it through. And when they looked at it, they said, well, the way that the pension system is set up, it really doesn't have to be that way. We don't need to make it complicated. So the auditors, Plant Moran, our auditors, everyone agreed that they didn't have to do it. But since we already had over $400,000 on our books, we had to get rid of it. And you could restate it based on the language in GASB 75 from the beginning of the period.
For a non-auditor, that makes, I'll just leave it at that. Any further, Commissioner Kling?
Thank you, Mr. Chair. Good morning. Couple of things here. Are you able to discuss the overall county OPEB liability and the direction it's going?
I don't get those.
Okay, from your answer, you were like, ours or the overall. I thought you had something on that. What are the goals for the percent financing of the defined benefit plan? We're at 62 now. Is there a number out there in a number of years that we want to hit?
Yeah, so we have last year was a 16, this year will be a 15-year amortization, so.
Right.
So that's going to decrease by 1 year. So in our goal is to, in the next 16 years, is to have 100% funded. Now, obviously, there's a lot of variables into that, right? But it's a worthwhile goal. But there's a lot of variables there, and so right now we're on a 16-year funding level for complete funding of the plan.
Okay.
We may have to revisit it,
Of course.
over the time, but.
That's another question I kind of have for you on that. Am I expecting in the proposed budget for this year another increase proposed by the county executive over and above the annual required contribution?
Are they going to request another one?
Yeah.
I believe they will, but I don't know.
An increase in funding over the ARC.
Yeah.
But you're not aware? Okay.
No.
Yeah, I want to look for that. Everybody's reporting that the Dow Jones is on a historic 10-year, 11-year bull market run. Like one that we haven't seen since, I don't know, Clinton was president. And it also occurs to me that our current president's been there for 2 years, so 8 years of this bull run happened under another president. Well, how does that figure into, because bull runs don't go on forever, how does that figure into how you make calculations and look forward to the, into the future with all the likelihood that, next year or 2, 3 years, market's going to level off or take a little downturn? How do you take that into account?
Great. So the biggest problem about the stock market, the bull market, we hear the report every day. The Dow was up X, the Dow's down Y, the S&P. So not even a whole year ago, from right after September 30th, we closed our fiscal year, which was great, and then October, November, and December, a very bad very bad quarter, and it took really calendar year to date. So that was negative, and we forgot those 3 months really punished in the market. A lot of people, you might have got your quarterly statements or your personal statements and remembered in January, said, "Oh my gosh, look at this! This was terrible." And then the market had a big rebound in the beginning of January, February, and as an example, and I'm going to answer your question. I was just trying to set up a little bit of the table, and because it's a little more complicated than just.
Well, I know, yeah.
So, going from calendar year to today, we're up calendar year. We're up 9.7%. Okay, this year. But if I factor in the 3 months that we are down, we're just under 2% for the fiscal year. And so, to answer your question, we're a very complex system, and we're not really market timers. So we're never going to try to time the market in the pension fund, because we're paying out $12 million a month in approximately just under $12 million. Matter of fact, in this report that we received today, we saw that we paid $3 million less of defined benefits because we're sort of over the height of the hump, and so now we're having less people joining in and more people starting to die. So I mean, but it is what it is. I mean, it's not the most glory, but we went from $139 million last year to, I believe, 136, and this is of pension payments, and it'll be decreased again this year. But ultimately, we have to have money available every month to pay these pensions. So opportunistically, we really rely on our asset allocation, Commissioner. So I wanted to paint the whole picture. So our asset allocation, we try to stay true to our asset allocation. And, so sometimes, the growth market's a little more growthier with the FANG stocks or value stocks, but we try to be fully invested. Now, we do take opportunities, and we take opportunities if we think there's some dislocation in the market that might be offering an opportunity that we will look at with our consultant and look at some of those opportunities. So the last several years, fixed income was very low, as we know that, you couldn't, you put something in a bank and you earn 1%. And so, we're required to have fixed income by Michigan Public Act in our investing. So, we looked at direct credit and other ways to enhance that yield. And, we're still looking at that opportunity, but is that market gone? Is the direct credit line gone? Because, banks weren't lending back there. So we were able to enhance our yield on the fixed income side. So we're always trying to be opportunistic. So the answer is we're always staying invested. We don't want to leave cash on the sidelines. We know we have to pay pensions, and if we feel we have to de-risk the portfolio a little bit, we will. And but we're going to be 100% invested in the market. We just can't time it.
Yeah,
I was trying to give you that example of that last quarter of the last quarter of 18 versus the first half of 19. We wouldn't be that nimble, and we would have missed that. We would have got punished and we would have missed the run up if we were trying to be timers. That was the whole point of that example.
Yeah, I got you.
I'm going to try to time this. Mr. Abbo would like to weigh in on this conversation.
Rob, if you don't mind, can I supplement some of your discussion about Mr. Colleen's question?
Please.
Actually, in my opinion, the Retirement Commission does an excellent job, and they are extremely professional in the way that they approach investment. The investment objective is only a 7.25%. We've gone beyond that objective for the last 7 years. This year was slightly lower than it had been in the past. So we were around 7%, 7.25%. But in the past, we've gone beyond that. In addition to that, there's a smoothing that takes place that when the investments are way beyond the objective, we recognize that revenue not in the year that it's achieved, but over the next 4 years. Mm-hmm. So there's approximately $20-30 million of unrecognized assets in the system right now. So we are actually beyond even the investment threshold that we're talking about is 62%. So again, it has the effect of smoothing it. And beyond that, they don't invest in just Wall Street and the Dow Jones. There are real estate investments, they're private equity investments that kind of dilute the risk associated. Diversify. Thank you. Perfect term. So again, they're very astute at achieving the strategy of achieving at least 7.25%, which is the investment strategy and directive.
Yeah, this time of year for smoothies. Anyway, Commissioner Killeen, are you still?
Yeah, thank you, Mr. Chair. So to even out the ups and downs, we don't try to play the timing game. We're somewhat relying on the smoothing to help us, and we're sitting on a net position of $1 billion. Does that come into play then too, that you have to have enough of a padding to help smooth out the ups and downs?
Again, we're not going to market time. So right now we have some, as Mr. Abel said, we have gains in the bank. So we have gains from prior years in the bank in the smoothing area. But the market can be fickle. We could get
That's what I'm saying. How are you guys dealing with that fickleness?
Well, the fickleness is going to be done by a policy, by smoothing, by taking this 4-year smoothing. Yeah. So that's one way. The other way is we're going to look at, like I said, we're going to look at opportunities that we think that are maybe not valued correctly in the market. Yeah. But again, we're not going to take heavy bets. We're going to take position bets of 2.5% to maybe 5% at the most.
And does the net position come into play then too, where you can?
No, the cash flow comes into play. Cash flow comes into play because we're paying benefits. We got to write that check, send that money over to the county treasurer to pay the retarees every month. So that is really the.
As more and more I get as I sit at this table for the many years that we've
Sure.
done this, you know, the long term over the next 10 years, where are we at, you know?
Right.
We are going to be facing a down market at some point in the fairly near future.
It always comes.
So how do we deal with that? Okay, that's what I was getting at. The other thing I was curious about was the 12 million increase in money in the county cash pool.
So that,
How's that, why is that decision made?
because we pay about $12 million a month, and we pay on the first of the month, and the end of the year is September 30th, and so that was really, you know, a transfer for the month.
It's in the general cash pool for the treasurer to be able to write checks?
Right, so we use the treasurer as a banker for the
Okay.
retirement system.
Yeah, I wasn't sure.
That's okay.
And the only, thank you, and the only other thing for the Auditor General, I've mentioned this before, but in your, I love your introduction that you do, but the entity and purpose type, I'm going to make the request again that we put board members,
Yes,
who the
you
current
did that.
board members are in there, and that are on the board, and when their term expires. If we could include that.
Yes, and we've noted that for all the future reports. This report was done prior to
Yeah,
that.
that's what I assumed, and that's why I was just mentioning it again, but I think that's also important information for commissioners to see on a somewhat regular basis. Thank you, Mr. Chair.
Thank you. Okay, Commissioner Coleman?
Thank you, Mr. Chair. Rob, we're at 67. I'm sorry, 62.
Correct.
62 point
62%, we'll just say.
62. Where's the airport at?
The airport is at 72%.
Wow, we're catching up.
We're catching up. Yes, we've closed that gap quite a bit this last couple of years.
Good, good. Yeah, I just want to take this time to compliment you guys over there in the pension. I think you guys do a good job.
Well, thank you very much.
I feel very safe with the way you guys are handling our pension.
Well, thank you. That's really what we want to. We want to make sure that we can honor these promises that were made, and we can keep those promises.
Ms. Cora?
Just what I'd like to add, I think too, and I mentioned in our backroom meeting, when we have retirement come over here, I think there's always additional information that Rob and Todd are able to provide that I think is valuable information, even though it may not be pertinent to the financial statements at hand, but the future, and I think that's good.
Thank you.
Thank you. Please proceed.
That concludes this presentation.
Can I get a motion?
I'll move for,
I believe that's D1,
approve.
2, and 3.
I'll move D1, 2, and 3.
So I have a motion to receive and file D1, 2, and 3. Is there support?
Support.
There is support. Is there any further discussion? There is discussion. Commissioner Webb?
I just want to echo the comments of my colleague and say thank you for the great job that you guys do. You're phenomenal, and I mean, you've seen that system through some really, really rough times, and I know that when the economy does its cyclical thing, we'll be in good hands with you there. So don't leave us.
Okay. Thank you very much. And if
Okay, all those in
anybody would
favor?
like,
All those in favor?
Hey,
Aye.
All those opposed? Ayes have it. Next item, Mr. Clerk.
Thank you.
Thank you.
Next item 4, forwarding a copy of the Office of Legislative Auditor General's review of the 2017 Stadium Excess Tax Independent Agreed Upon Procedures Report.
Okay, Ms. Cora?
We have representatives from the Treasurer's Office, if they could join us at the table.
Welcome, and could you introduce your guests when they get at the table? Thank you.
Oh, yeah, you're welcome. Yep. We don't bite too often.
Please proceed, Ms. Cora.
Introduce yourself.
Good morning, Melanie Kersey, Chief Deputy Treasurer.
Welcome.
Desiree Kirkland, Deputy Treasurer of Finance.
Welcome.
Natasha Peters, Lincoln Accountant.
Welcome.
Angelina Gibson, Department Manager of Cash Accounting.
Welcome.
Thank you. Peter Adams, Project Consultant, Policies and Procedures for the Treasury.
Welcome. And do you have your
I was gonna say,
green
is your
light
mic
on?
on?
You have to touch that button briefly,
There you go.
and a green light pops up. Give it a sec,
There we go.
because people double do it, and they turn it right back off.
Okay, moving right along.
What you have before you today is at the request of the Wayne County Treasurer's Office, the Office of Legislative Auditor General performs certain agreed-upon procedures to assess whether there's taxpayer compliance with the stadium excise tax, but this is for the calendar year 2017. Our procedures are agreed to between our office and the treasurer, and they're included in a memorandum of understanding between the treasurer and our office. And the treasurer's office also does pay our office $40,000 for each of these engagements that we do. I'm going to turn it over to Tequila Allen. She'll go through the results of the engagement.
Agreed upon procedure number 1.
Let me go to the background.
Okay. All right, background. The stadium excise tax, also known as the tourist tax, is assessed on gross receipts of hotels and motels at a rate of 1% and on car rental agencies at a rate of 2%. The assessment is on accommodations and car rentals of less than 30 days. The Treasurer's Office collected nearly $10.4 million during the 2017 calendar year. As approved by county voters in 1996, the tax collections are used to pay the debt service of the Stadia Complex, Comerica Park, and Ford Field, and for administration costs related to collecting the excise tax. For fiscal year 2017, sufficient tax revenues were collected to make the debt service payments. In September 2012, the Stadium Authority issued Series 2012 Refunding Stadium Authority Revenue Bonds payable through 2026 for the purpose of advance refunding of the Series 1997 bonds dated March 1st, 1997. The advance refunding will reduce the authority's total debt service payments over 15 years by almost $8.2 million. The excise tax collections are recorded in a special revenue fund. After administration and debt service costs, excess tax collections can be used to fund other land development projects in Wayne County. The Treasurer has the authority to assess and enforce interest penalties on any unpaid tourist tax due. The former treasurer had concerns with enforcing the tourist tax law due to an inability to obtain sales tax data on taxpayers from the state of Michigan. In accordance with the existing MOU, the OAG will annually conduct the agreed-upon procedures over compliance with the excise tax through calendar year 2019 for a fee of $40,000 per year. Agreed-upon procedure number 1. Identify unregistered taxpayers that are responsible for but not remitting the stadium excise tax. We identified 16 unregistered hotels, motels, and car rental agencies that were operating a business in the county and not remitting the excise tax for 2017. 9 taxpayers are hotels and motels, and 7 taxpayers are car rental agencies. We were unable to determine when the businesses opened. The OAG performed the following actions. Requested financial documentation from the 16 unregistered taxpayers, however, we received no response. We provided all unregistered taxpayers registration forms for the stadium excise tax by mail. We also provided the contact information for the unregistered taxpayers to the Treasurer for future follow-up. Agreed upon procedure number 2. Compare gross receipts from SET returns remitted to the Treasurer to receipts reported by taxpayers on their respective State of Michigan annual use and withholding, or SUW, returns, noting unusual discrepancies between the amounts reported. We requested from the state copies of SUW returns for all taxpayers remitting the excise tax to the Treasurer for calendar year 2017, with the exception of bed and breakfast establishments and car rental agencies listed under the same federal employer identification number. There were 40 registered taxpayers selected in 2017 for which we could not determine a reasonable explanation for unusual discrepancies between the SET payment and the taxpayer's SUW return, 36 hotels and motels, and 4 car rental agencies. From these 40 taxpayers, we judgmentally selected 27 out of 40, or 68%, for either an on-site examination or a desk audit, 26 hotels and motels, and 1 car rental agency. Agreed upon procedure number 3. Conduct on-site audits of selected county taxpayers' financial records for comparison to amounts reported on their SET returns for accuracy. Of the 27 taxpayers selected in procedure number 2, we determined for calendar year 2017, 13 taxpayers had over or underpayments for the 1-year period. 9 had overpayments, 1 had an immaterial underpayment and was considered in compliance, and 3 taxpayers had underpayments that were not in compliance with tourist tax laws. The remaining 14 taxpayers were determined to be in compliance without any noted over or underpayments. Agreed upon procedure number 4. Calculate any deficiencies in payment of tax as well as penalties and interest on the deficiency for non-compliant taxpayers identified in procedure number 3. We calculated penalties conservatively at $10 or 10% due to the fact that based on procedures performed, we found no indication of intentional disregard or fraudulent intent. We calculated interest on delinquent taxes and penalties based on interest rate provided in Revenue Administrative Bulletin 2018-13. The OAG calculated that approximately $1,562 in tourist taxes, interest, and penalties could be owed to the treasurer for the period of January 2017 through December 2017. Based on the agreed-upon procedures performed, we determined for registered taxpayers selected for our sample, we found that approximately 89% were in compliance with stadium excise tax laws, and approximately $1,562 of tourist taxes, penalties, and interest may be owed to the Treasurer's Office for calendar year 2017. On behalf of the OAG, we would like to thank the officials in the Wayne County Treasurer's Office for their cooperation during this engagement.
Yeah, I have a question to the auditor. It says one of the things said on the presentation, we were unable to determine when the business opened. Don't you mean when a business was registered to become a business?
Correct. When for example, a new hotel, when they were built, of course, we would keep track of that. But if, the hotel industry, they change management companies so often. And the people, when we contact them, a lot of them are just the workers who work there. So I can't really get in contact with the business owners.
But can't you call someone in the city that the hotel is in because they have to register?
Well,
They have to have occupancy permits, they have to register. There's certain things that they have to do with the city.
Right, but based on our agreement with the Wayne County Treasurer's Office, we are not necessarily there to enforce the taxes. What we do is identify and then report the information over to the Treasurer's Office for follow-up.
And I guess my thing is in identifying, like a call to the city or municipality that the business is in, they should be able to, at the clerk's office, they should be able to tell you. So just a thought, or, well, that's all I got. Ms. Cora?
We can consider that in the future as part of our memorandum of understandings if we want to take that additional step in trying to determine when the business actually went into effect, or if that's something the treasurer wants to do from their side, because we do send a separate letter, Mike will talk a little bit about it, to the treasurer's office over this letter that lists each of those individual unregistered taxpayer for their follow-up. So it's the treasurer would have to decide who wants to determine that.
Mm-hmm.
Okay. Well, please proceed. Is that it?
Did you want to?
Okay. Is there any questions or comments from commissioners? Commissioner Kleen?
Thank you, Mr. Chair. You're going to do this again next year? Is that what I see?
The next 2 years is part of our memorandum.
Next 2 years,
of
okay.
understanding.
Good morning.
Good morning.
So you're going to chase down these scofflaws now that we have a list of them. Is that your intent? Is that what you guys are going to go about now?
Yes.
Okay. So you have a list. I'm kind of curious as to the physical location. We've had a lot of hotel activity. Well, let's say 48226 and 48201, otherwise known as Gilbertville. There's a lot of these kind of businesses opening. I would dearly like to see that list of 17 to see physically where these unregistered businesses are. But you're gonna go
Yes.
hopefully track these down. Do we have any way of estimating how much revenue we're missing out on as a result?
According
We have-
to their report, we're looking at, is that the 1,500?
Well, no, that's for the
That's
registered,
interest.
right?
Registered, okay.
Yeah, items 2, 3, and
Right.
4 deal with the registered folks,
Correct,
and there's not a whole lot there. Things seem to be kind of, sort of okay there.
right. Because when we attempted to receive financial information for the register, we were not able to obtain that, and that some of the treasurer's office may be able to obtain from them once
Right.
they're notified that they weren't registered.
Well, good luck chasing them down. I think the last time we looked at it, it wasn't necessarily like 16 hotels. There was only a couple of
Don't,
hotels and car rental that we identified. Are the numbers going up for unregistered?
they have gone up since the last time. I think it was, Mike was saying it was 4 last time. But what I think is important with all the new development going on, that
Right.
could possibly be how we have unregistered.
Yeah, so those numbers are going up. Airbnbs included here?
No.
No.
Okay. I think there was one other thing, Mr. Chair. Trying to make notes as you go through. Okay, Airbnbs now. Okay, that's it for me, Mr. Chair. Thank you very much, and good luck with these guys.
Thank you.
Go get them.
Ms. Cora?
And I think a comment too, and the amount of money from the registered taxpayer that's not being reported has been significantly reduced over the years, and I think it contributes to the treasurer's office, the work they're doing, and also I think just the word on the street that somebody is out there looking and auditing them, I think makes taxpayers more apt to report proper information.
Thank you.
So, thank you guys very much. We appreciate us all rowing together. That's a great thing. Is there a motion to receive and file?
And forward to the full commission. Yep, I support
Thank you.
Commissioner
Been moved and
Clark
supported.
Coleman's motion.
Any further discussion? All those in favor?
Aye.
All those opposed? The ayes have it. Next item, Mr. Clerk.
Next item, E, such other matters as may be properly submitted before the committee.
There are
Outing to
there are
the-
none.
Next item, F, public comments.
Is there anybody from the public would like to comment? Mr. Kandrivas, would you like to say anything? Anybody from the public like to comment? Anybody from the public like to make any comments? Okay. Next item, Mr. Clerk.
Item G, adjournment.
It's been moved
Support.
and supported. Any discussion on adjournment? None? Okay, all those in favor?
Aye.